Is it possible for long-term investors to avoid experiencing a lost decade? A lost decade refers to a period of time where an investment or the stock market remains at the same price or doesn't make an all-time high in those 10 years. When you look at Disney, it dropped to a low of $78.73 earlier in 2023, and it first saw that price in early 2014. Almost 10 years. If you had bought Disney in 2014 and you don't account for the dividend payments, you're flat on a 10-year-old investment. I've been an investor in Disney since February 14th of 2012 with an initial buy at $41.70. Obviously, it's been grim death since the epic more than 60% crash from its all-time highs in 2021 to its low in 2023. However, even though the stock is only up 116% from my starting price, my investment is up over 155%, which works out to an average gain of about 14.17% per year over the years that I've held it. How did I protect against experiencing a lost decade? Although I am a long-term investor, I never just buy and hold. I buy in stages and sell in stages over the life cycle of my investment. Typically, I'll buy 50% of what I want in a stock right off the bat, saving the remaining 50% to buy in 10% increments if the stock sells off. If the stock never sells off far enough for me to get a full allocation, then what I have is what I have. I never buy above my cost basis. Every time I've bought above my cost basis, every single time, the stock ends up falling through my new cost basis, falling through my old cost basis, and making new lows below my old cost basis. Every investor is different, but personally, I'd rather have a smaller position that's extremely profitable than be all in and not have any money on the sidelines because the stock sold off more than I could have anticipated it would. Once I've built the position, the next step is taking profits. If the stock is below an all-time high, I'll start by trimming a very small amount of my position at the all-time high, typically less than 5% of what I have. The reason I do this at all-time highs is that there are bag holders who bought at the all-time high. Once the stock returns to that level again, these investors will consider themselves whole, and they'll start selling, even if it looks like the stock could make higher highs. They've been down for so long, they just want to get out. At that point, the stock typically pulls back, and if it pulls back far enough, I'll actually put the capital that I made by selling at the all-time high back to work in smaller quantities on the way down. Eventually, the stock will break through the all-time high and keep going higher until it finds resistance once more. And then I'll repeat the process with that new all-time high being my next sell target. I will continue to do this until I've removed all of the original investment capital from the position, at which point I'll be playing with the house's money. In other words, I won't have any of my own capital at work. The entire position will be made up of profits that I've earned over the years that I held it. This is what I did with Disney. I had taken all of my original investing capital out of my position by 2018, which meant that I had no capital left in it as it rode from 2018 to its all-time high in 2021. After the stock hit its all-time high and started to sell off, I added too much back in. In addition to adding in all the profits I had taken out, I also added in more capital, actual investment capital. When Disney broke below $90 a share in May of 2023 and did it again in June, I established a new rule for myself. Never ever put actual investment capital into a position where I had taken all of it out. In other words, never turn a winner into a loser. After Disney bounced above $90 again in July, I decided at that point that I would remove all of the capital once more and some profits to add to Disney if it sold off, which it did. The key lesson to avoiding a lost decade is this: whenever a stock or the market sells off, it's never the end of the world. The only way investors can avoid a lost decade is to continue buying when stocks or the market are selling off dramatically. The only investors who experience a lost decade are those who are hands-off and don't buy at those lower prices. You need to remember you're in this for the long term. So when you see a systemic market sell-off or a sell-off in a stock that you believe in for the long term, you should consider adding to the position. I started GetEarked 5 years ago as a way to teach others, for me to be able to give back. If you appreciate what I do, please consider giving a like to this video, as it really does help the channel out. Thank you so much for spending your time with me, and I'll see you in the next video.